Hello and welcome to European Open Briefing for Monday, August 14th. I'm Andreas Georgiou, currencyanalysis.com, and together we'll be looking at the main developments in currency markets today. So we'll see that the US-North Korea spat is still dominating attention. Of course, it is also fairly quiet in terms of other data, and this helps this story remain on the front line. We also see that we had some Japanese GDP numbers released today. Those came in better than expected, but they failed to provide much of a boost to the Japanese currency. Afterwards we'll take a look at the effect that Friday's softer than expected US inflation numbers are having on the Fed's actions throughout the rest of the year. Additionally, we'll see that today we saw the release of some Chinese numbers. Those came in weaker than expected, but the market reaction to those data was mostly muted. And finally, we'll take a look at the economic calendar, where we'll see that today, besides Eurozone industrial output numbers for June, there's nothing else to gather investor attention in terms of economic data. So moving on, we can see that the dollar yen is rising in today's trading, whereas the dollar index is more or less flat. We can see that they both fell after Friday's weaker than expected inflation data out of the US. Specifically, dollar yen fell to its lowest since late April. It fell below the 109 handle. Geopolitical tensions involving the US are supportive of a stronger yen, as the Japanese currency is perceived as a safe haven. On Saturday, Xi Jinping, the Chinese president, had a telephone conversation with Trump. He urged sides to avoid words or actions that raise tensions. He also added that there needs to be a peaceful resolution to the North Korean nuclear issue. And allow me to remind you that last week, US President Donald Trump warned North Korea that it would face fire and fury. And in response, North Korea said that it considers launching missiles at Guam, a US-held Pacific island where the US also maintains a military base. Moving on to today's Japanese data, they showed the Japanese economy expanding at an annual rate of 4%. In the second quarter, it was much better than expected, but interestingly, there was not much of a reaction in the markets. Moving on, dollar bulls were expecting inflation figures to mirror the non-farm payrolls. The non-farm payroll report strength. Non-farm payroll report was released in early August and came in much better than expected. That allowed the dollar to rally, and dollar bulls consequently were expecting Fed hike odds to rise. There were similar expectations for inflation numbers, but this wasn't the case. A Fed hike wasn't strongly put back on the table. December Fed hike odds currently stand around 40%, according to the CME Group's Fed Fund future prices. Continuing with today's Chinese data, as I previously said, they came in weaker than expected, but they didn't hurt the yuan. Specifically, fixed asset investment grew at 8.3% year on year versus the 8.6% that was expected. Industrial output grew at 6.4% versus the 7.2% that was expected by analysts, and retail sales expanded by 10.4% versus the 10.8% according to forecasts. The Australian dollar, we can see below the Aussie USD chart, is holding steady. Usually it negatively reacts to weaker than expected Chinese data, as Australia and China are major trading partners. Also, let me remind you that last Friday, the Aussie fell to its lowest since July 18th, specifically fell to 0.7838. Moving on to today's calendar, here we can see the Japanese data, where among others they showed the Japanese economy expanding by 4% on an annual basis in the second quarter of the year. This is the fastest pace of growth for the Japanese economy since the first quarter of 2015, and it came in, and the numbers came in far above the 2.5% that was expected by economists. First quarter figures were also revised upwards. Here we can also see the Chinese data that I previously referred to, and as regards what's coming up in the rest of the day, we can see that industrial production numbers out of the Eurozone will likely attract some attention. That's it for today. Thank you for watching and have a great day.